Hello everyone, welcome back to Banking and Finance with Chitrak. Today we'll be discussing the fourth chapter of the Anti-Money Laundering module, which is International Guidelines and Standards. So let's begin this chapter. First of all, what are the sections that we are going to discuss in this video? These are the Basel Committee on Banking Supervision, or about BCBS, the FATF or the Financial Action Task Force, the regional bodies like FATF and the Ulsberg Group. So, what's the objective of this chapter? This chapter provides an overview of the evolution of the anti-money laundering and countering financial terrorism standards. It also familiarizes us with the international bodies that create guidelines, assist countries in implementation and monitor their measures. Now, Basel Committee on Banking Supervision, or BCBS. So, the primary global standard setter for prudential regulation of banks is the BCBS. It's a forum for cooperation on banking supervision, and it has published documents on money laundering prevention and customer due diligence, or CDD. So, what are the different kinds of documents that it has published? First of all, prevention of criminal use of the banking systems for the purpose of money laundering, which was published in December 1988, but now it has been superseded. But what was the document about? Basically, it dealt with the problem about the public confidence and stability in banks, which can be at risk by the unintentional connection with the criminals or direct losses from fraud, undesirable customers due to improper screening, or compromised internal staff. So, what's the solution they gave? They told that members of the BCBS committee agreed that banking supervisors, or the one who is heading a bank, have a general role to encourage ethical standards of professional conduct among banks and other financial institutions. So basically the solution was given to the banking supervisors to develop the ethical standard of each employee and the total workflow of the bank. What was the recommendation? BCBS published a statement which contained ethical principles recommending banks to ensure the following. What are the followings? All persons conducting businesses with the institutions are properly identified. So basically the customers of the bank should be properly known and the KYC documents should be properly identified. Then transactions do not appear legitimate are discouraged. So some transactions which is not appropriate according to the customer, then those transactions should be discouraged. Then cooperation with law enforcement agencies is achieved. So every bank should have a proper cooperation with the law enforcement agencies so that the money laundering and terrorism financing can be reduced as much as possible. Then the core principles for effective banking supervision was published in September 1997. It was published following the call of the Lyon G7 summit in June 1996 for strengthening the financial systems globally. 25 core principles were laid down and principle 15 referred to KYC. So what does principle 15 states? It states that banking supervisors must ensure banks have adequate policies, practices and procedures to promote high ethical and professional standards, particularly strict know your customer rules, and prevent the bank from being used intentionally or unintentionally by the criminal elements. So basically it kind of stated the same thing as the prevention of criminal use of banking system document stated. Then in September 2012, the principles were revised and now contained 29 principles. The 29th principle refers to KYC and it is about the abuse of financial services. It was revised to emphasize that banks need adequate policies and procedures, including strict customer due diligence rules, to promote high ethical and professional standards and prevent misuse for criminal activities. Then sharing of financial records between the jurisdictions in connection with the fight against terrorist financing. This document was released in April 2002. Based on discussion among bank supervisors and legal experts of G10 central banks, BCBS issued guidelines on sharing of financial records between jurisdictions in connection with the fight against terrorist financing. So basically this is about sharing the financial records of each bank or each country among themselves. This paper mentions that the size and geographical scope of international financial systems make it necessary to improve coordination and collaboration among all parties involved. including measures to identify and prevent terrorist financing. So they gave two mechanisms for the information flow. One is from a government body in one country to a government body in another country, and the next is within a single financial group, that is between the financial entity operating in one country and its head office or parent institution in a different country. Next, the General Guide to Account Opening and Customer Identification document was published in February 2003, but it has now been superseded. So BCBS published the Customer Due Diligence for Banks in October 2001, which was superseded by Sound Management of Risks Related to Money Laundering and Financing of Terrorism in January 2004, which will come next. And this document contained general guidelines for customer acceptance policy, customer identification, ongoing monitoring of accounts and transactions, risk management and KYC standards in cross-border context. So in February 2003, the paper named General Guide to Account Opening and Customer Identification, in addition to the 2001 paper, which was Customer Due Diligence for Banks, was included, and it focused on mechanisms banks can use in developing customer identification programs. The next document we are going to talk about is Due Diligence and Transparency regarding cover payment messages related to cross-border wire transfer, and it was released in May 2009. So emphasized the need for greater care in cross-border payment messages to prevent and detect financial crime. So with the advent of time, different companies in different countries started to have cross-border transaction, and it needed so that money laundering does not take place. So the guidelines aim to enhance transparency of payment messages and ensure compliance with AML CFT requirements by providing norms for the information included in the payment messages. The next is Sound Management of Risk Related to Money Laundering and Financing of Terrorism. It was released in January 2014 and then revised in July 2020. This paper was issued subsequent to the FATF's revised 40+9 recommendations, and now it has 40 recommendations. So the purpose of this document was to implement the FATF standards and Basel core principles, providing an overall framework of banking supervision. We'll come to FATF standards in the next part. What were the key contents? Well, it merged and superseded the previous BCBS publications like Customer Due Diligence of Banks and Consolidated KYC Risk Management. So all of the previous documents were superseded by this Sound Management of Risk document. The comprehensive guide provided banks, banking groups and banking supervisors with a comprehensive guide for taking appropriate measures for implementation of FATF recommendations. This area included issues related to AML and CFT in a group wide, that is in a particular section wise, and a cross-border context, emphasizing on internal policies, corresponding banking services and specific guidelines for new products. The key elements of sound management of risks are assessment and understanding of money laundering and terrorist financing risks. Element determine risks at the country, sectoral, bank and business relationship level and apply appropriate mitigation against the risks. Then proper governance arrangement. Board of directors were to approve and oversee policies for risk management and compliance. Then there was 3 lines of defense. The first line is the business units is in charge of identifying, assessing and controlling risks. The second line is chief officer in charge of AML CFT, human resource or technology, and then the third line is the internal audit function. Then transaction monitoring system, adequate system with respect to its size, activities and complexity as well as risks present should be there in each bank. And for most banks, especially those internationally active, effective monitoring is key to automating the AML process. Then customer acceptance policy, it said that basic due diligence for all customers, equivalent due diligence as the level of risk associated with the customer varies. So basically we have discussed in previous chapter that there are basically 3 kinds of risks: high, low and medium, and each risk comes with different levels or different varieties of due diligence. Then customer and beneficial owner identification, verification and risk profiling. I have discussed in detail about different kinds of beneficial owner in our KYC chapters. So the BCBS recommendations said that customer and beneficial owner identification is a must and to verify the customers, and where applicable, identification of any person acting on their behalf should be done minutely. Then a bank should use information to build an understanding of the customer's profile and behavior, and due diligence should be conducted sufficient to develop customers' risk profiles. Then management of information. Record keeping of all information obtained in the context of CDD is a must. Updating of information by undertaking regular reviews of existing records and updating CDD information. Supplying information to supervisors on request. Then reporting suspicious transactions and asset freezing. Reporting of suspicious transactions to prescribed authority and freezing of assets as per decision made by the competent authority. The final key element is about group-wide and cross-border context. To coordinate and apply policies and procedures on a group-wide basis. Then thorough understanding of all risks associated with its customer across the group. Monitoring and evaluating AML safety standards in the jurisdictions of the referring bank. Coordination of information sharing in the group considering legal data protection and privacy laws and regulations. Now we'll discuss about the Financial Action Task Force or FATF. So the FATF is an intergovernmental body established in Paris in 1989 by the G7 Economic Summit to combat the money laundering, terrorist financing and other related threats to the integrity of the international financial system. What's it comprised of? It comprises of 37 member jurisdictions and 2 regional organizations as of March 2022, and it represents most major financial centers. It also includes several regional global organizations as associate of members. What's the work principle of FATF? FATF identifies and analyzes threats to the integrity of the international financial system. It develops or refines international standards for combating money laundering and financial of terrorism, promotes global implementation of FATF recommendations, assesses, monitors how members have implemented recommendations, identifies, engages with high risk and non-cooperative jurisdiction. So these 5 are the basic work principles of Financial Action Task Force. What are the standards of FATF? FATF recommendations are the core of international measures in AML and CFT. The 40 recommendations on measures for prevention of money laundering were adopted in April 1990. What's the purpose? These aim to prevent, detect and punish the abuse of the international financial system for money laundering and for terrorist financing. In 2001, a special 9 recommendation to combat terrorist financing was released. In 2003, revisions was done which strengthened the customer due diligence and standard for money laundering. In 2005, added measures to detect physical cross-border transportation of cash and bearer monetary instruments was done, and the United Nations Security Council Resolution 1617/2005 implemented the 40+9 recommendations of FATF. Revisions are again done in 2012 and published as International Standards on Combating Money Laundering and the Financing of Terrorism and Proliferation. These standards apply to various entities including government, financial regulators, banks and other financial institutions. So that is it for the first part of this chapter. In the next part we will discuss about the key FATF recommendations that we are discussing about. That means the 40 recommendations by FATF. So until then, thank you, keep studying, and if it was helpful to you, like, share and comment below to get the notes. Thank you.